Hello and welcome to Uniper's Market Insight. We are back after a short Easter break. My name is Florian Oberländer, and to your left, to my right, our Chief Analyst Gregor Pett. Hi Gregor.
Hi Florian, good to see you.
Gregor, you had a well-deserved Easter break as well.
Well deserved, I don't know, but there was a short break, yeah, indeed.
No, absolutely, because you were traveling for Uniper right before to Houston, Texas. We will talk about this a little bit later today. But I would suggest that we start with the developments recently on the energy markets and for the commodities, and something that sticks out. That's obvious to everybody that has passed a gas station, over the last couple of weeks. That oil was quite bullish, so increased in the price. The last time we talked, it was around $80 per barrel, and it has now broken the $90 per barrel mark. There are some reasons for that. Can you maybe explain a little bit in detail?
Yeah, so on the oil side, we have indeed drivers that are not so prominent on, for example, the natural gas side. So oil plays a major role in transportation, and you mentioned gas or diesel, the fuels. And on the one hand, we have due to the geopolitical situation, still increased risk for supply disruptions. We have the situation that the Red Sea is difficult to navigate, despite the mission that is ongoing to secure the shipping in the Red Sea. So it's still dangerous. Many cargoes then take the detour around the Cape of Good Hope. And all that put together sheds some light on the geopolitical crisis and potential supply risks. On the other hand, we have demand drivers like transportation that are not so dependent on the economic situation, like, for example, gas or power demand in the industrial sector. So relatively stable. Also to mention wars, like unfortunately the ones we see at the moment, are fuel consuming. Yeah? So countries that are in war stock up, and they use fuels for tanks and aircraft, and that of course stimulates, unfortunately, demand as well.
Of course. So we have a mixture of geopolitical drivers as well as supply drivers there as well. Yeah. One thing that I found interesting as well, that the OPEC Plus has decided to stick to their voluntary production cuts for some time, I think until June next year. So we will update our audience, of course, if that changes there as well. That you mentioned that diesel and gasoline, I found this as well. Diesel has not developed as bullish as regular gasoline because the heating period is over. I found that quite interesting to see why wasn't that bullish there as well. You mentioned it previously as well. The Red Sea is still a little bit risky to pass by. What is the situation there?
It's still tight. Yeah, it's still dangerous. So there's a mission ongoing then to secure the traffic in this region, but still there are attacks on shipping. So still a tight, intense situation.
So we still see the tankers, okay. And that also applies for LNG, if I understood it correctly.
That's correct, yeah.
And something else that is driving the LNG market to a certain extent, other news coming out of Freeport, Texas. There is the second largest export facility for LNG. There were some damages during the winter period, and now they are being repaired, leading to production of only 1/3 of the regular production. Has this impacted the European market so far?
Not as far as it could. Yeah? So the situation in Europe is still relatively okayish. So we have full storage because the winter was relatively warm. We have seen industrial demand destruction in Europe, and also in countries with high energy consumption in the industrial sector, in particular Germany, Netherlands, those countries. So all of that relatively low demand with relatively good supply leads to, and high storage levels leads to a situation where disruptions like the one you mentioned with Freeport don't have such a big an effect. Yeah? So, but if many effects pile up, if you would see other more disruptions, the situation for sure would be very different to that. Also, if it became cold or in the winter, or if industrial demand would pick up to levels pre-crisis.
Yeah. Talking about disruptions, we see reports of the Ukraine and Russia attacking each other's infrastructure. What impact, despite what is happening on site, of course, what impact could that have for Europe now and maybe moving towards the summer season?
There are two main factors. One is the pipeline connection through Ukraine, which is still intact, and still Europe gets deliveries through that route. In case that pipeline was damaged, we would see effects in the market then, if that happens. So that would be clearly bullish. On the other hand, the EU has, or Europe has used storage in the Ukraine, and gas has been injected and withdrawn from that, and that is still ongoing. In case storage sites would be damaged, there would be less of that possibility. So that could have another effect, which means then in case there's surplus gas that people want to inject and they can't do that, that would then depress prices even more, and the other way around in case people want to withdraw. Yeah? So
and of course, it wouldn't be available during the time we need it, actually.
Yeah.
Okay, I looked at the numbers as well, and the forecast for this year is 5 BCM. Last year was 3 BCM, so quite an increase, of course, if the infrastructure is available. So that would help a lot.
Yeah.
Good deal.
So these two effects.
We also talked about it during the last episodes. Joe Biden's LNG export halt is also, filtering into gas to a certain degree. Are there any news on the halt there?
No. So the situation is that the administration still assesses the situation, but recently my impression was that the administration tries to calm down the situation a little bit and not to basically push up the stories of that this would have a major impact. So physically, in any case, it has a relatively limited effect anyway. So the projects that are producing right now, they have all the permissions they need. So we can't expect that any shortage because of this LNG pause issued by the current administration. How that will go on depends not only also on the outcome of the elections. I mean the moratorium itself plays a role in the campaign, of course, but what actually happens then not only depends on the administration, but also on majorities in the Congress, which then means how that practically plays out, we can't tell at the moment. But I would, in the short to midterm, not expect such a big physical impact. Sentiment will be influenced, but physically limited impact.
I think overall there are currently 4 projects that are in discussions. And that's something that our office in Washington, D.C. also confirmed that it's a highly political thing right now that also goes into the election period right now. So very interesting times in the U.S., of course.
Absolutely, yeah.
Something that is filtering through, gas prices always filter through to power. Have you seen any spectacular movements when it comes to power?
No, not really. We have a huge infeed of renewables also on the power side, which is good. And then, of course, in situations where the wind is not there or the solar PV can't produce, we need to balance that with dispatchable generation that is clearly identified. And also the German government, to give one example, have issued the Kraftwerkstrategie, so the power plant strategy, etc. So the need for that is widely recognized. So that's good. But other than that, not spectacular, nothing spectacular.
Yeah, I understood as well that the current Sahara sands are also impacting
Yes,
the PV production. So
Yeah.
something that we see on our cars, that it's also impacting renewables. It's good to know. You mentioned it earlier. You were a guest at the CERA week in Houston before the Easter break. It's an annual energy conference in the US, hosted by S&P. What was the general mood? What were the takeaways that you got from there?
Yeah, there's quite some good discussions there, and also when it comes to the political situation in the US, and it's good to see that it's not as easy as sometimes in Europe. If you read the papers, it's all Democrats versus Republicans, and they don't talk to each other. This is not the picture you get there. So the picture is there's a lot of discussion going on between the parties, but also between the US states. Yeah? So the states have different opinions as well, and also different interests, and it's much more complex than sometimes we see from Europe. And it's good to see that there's lots of discussions going on also across party boundaries. And it also then illustrates that what actually then becomes law or is actually done also depends on the outcome of these discussions. And that was a very good example to see that in live, then these discussions on stage. Yeah.
It's always interesting to see the European view then and what it actually is on site as well. One thing I wanted to ask you about, because I read it, that it was a quote from this conference. Green revolution failed so far. I thought this was a little bit over the top, but was this topic discussed? Yeah, well, it's always easier than, or these are very high-level headlines. That certainly was not the sentiment on the conference, that the transition has failed. Yeah? If you look at, for example, renewables, and that is picking up in almost all parts of the world. So in Europe, I would say we've been very successful in making that happen, making that work, and it's actually continuing. There are other parts of the energy transition where, of course, we all might wish that it goes faster. When we're talking about green hydrogen in particular, so we could all wish that probably it would go faster. But you clearly see the tendency that people are working on that, and certainly that gathers speed. Yeah, but everybody can say, yeah, I think it should be quicker. That's fair enough, but it's not the sentiment on the conference that these elements have failed. They may be slower than some people want, but certainly not failed. Of course, yeah. Framework conditions have to be right as well. Absolutely, yeah. We discussed that, but I think earlier this year we reported on China and the US being on one table and agreeing on renewable targets, so I think that's an overall good sign there as well. Yeah. All right, Gregor, checked off my long list of questions. Oh, that's great. Yeah. Thank you very much for the insights, and already looking forward to the next episode. Indeed. Thank you very much, Florian. Okay. And to you out there, please make sure to share this video, like the video, or leave a comment for us. If you have any questions, please leave it there as well. And it would be nice to see you next time again. Until then, bye-bye.